My name is Joey Epley. I'm on the business development team here at NuView Trust. And today I would like to introduce Chris, Leo, and John Thomas. And they are the founders of Breakthrough to Billions. And they are real estate syndicators. And they focus on multifamily real estate. And in the real estate industry as a whole, I feel like multifamily has been like the hot topic this year, especially and lately. So Chris and John are going to be able to expand on that and compare it with single family real estate and give the pros and cons of those. And just a quick disclaimer before we get started as well. None of this is investment advice or guidance. We're strictly just a passive third-party custodian, and we do this to educate our clients on what they can do with their IRA money, or what they can do with their IRA money in regards to real estate, because there are several options out there. So we got the experts, Chris and John, on here, and I will let them take it away from here.
All right. Sweet.
Sure. Yeah, thanks, Joey. Quick question. Is there any way you can make my camera so that I'm visible to everybody else just for this little intro section here too?
Yeah, let's see.
Okay.
Let's see.
So that's John Thomas's screen, I believe.
Correct. Yep. Yeah. Everybody see that?
Well, either way, we don't need to, I'll just kind of talk, and if you. Oh. Okay.
We're right there.
John Thomas, yeah, can you hear me?
Yep.
Okay, cool. So, anywho, hi everybody. Can't see you, but like Joey said, my name is Chris Leo, and I am the one half. I would always like to say I'm the lesser half of the Breakthrough to Billions team. And I know probably the first thing we should talk about is the name, Breakthrough to Billions. People kind of always ask us, "Oh my gosh, are you talking about billions of dollars?" And look at you, like you look like a young guy. There's no way you've made billions of dollars yet in your life. And the answer would be yes. Like, no, like I have not made billions of dollars. And that's not even what we're talking about. We are talking about something much deeper, on a deeper level. And that would be, we are talking about those billions of meaningful, happy life moments that come through building those lives filled with, intentionality, freedom, purpose, and impact. See, look, obviously nobody out there would say that money is not important, okay? We're here talking with all of you guys because we all believe that money is important. But we've always viewed money as like a tool, a vehicle, just a means to an end. And money is good, only so good insofar as much as it can help us build those lives, like I said, of freedom, helping us live with intentionality and make an impact in the lives of those around us. John Thomas and I both come from backgrounds of advocacy, and that's what we're all about. That's why we are trying to do, because if we're just in it for money, well, that's not going to help us live, as the kids would say, our best lives. Like that's not what we're about. So we always we offer education and stuff like that because life is always deeper and more important than money. But that being said, we're on here to talk about money and investment vehicles and plans like that. And our goals is part of building lives filled with freedom. It involves financial freedom, and we're assuming that your goal is to accumulate cash flowing assets, not just savings for retirement, because as we've seen here, it's pretty hard to just save your way to retirement. And it's very, like I said, it's very, very difficult. And there are many different investment options out there, but we see real estate investing as one of the very best options for a couple different reasons. We know that real estate allows you freedom from the often volatile stock market. We know that real estate involves lower risk than a lot of the other investment vehicles out there. And we also know that real estate absolutely provides amazingly impressive returns for those who invest. It's the best vehicle for building passive income and generational wealth. And it allows investors to basically have amazing returns on their investments without, like we said, exposing yourself to risk. I mean, some people can see amazing targeted returns of 10%, 15, 22%, and even 27+% returns, every year for the life of their investment. And see, there's this picture, John Thomas, I think it's on the next slide here. There's a picture that's been floating on Facebook.
Can everybody see the slides? Joey, can you see these?
Oh, he's muted.
Yeah, I can see the slides. It should be good. Yep.
Okay. Yeah. So, John Thomas, why don't you talk a little bit about this
This
here?
is something, and I like, again, kind of what Chris is going on to. Again, like when we talk about breakthrough to billions, like for me personally, just to go back real quick, as a young man with a young family, I'm looking ahead and I see the investments like my parents tried to make, and then how they were affected with the last recession. And so it's not all about billions of dollars. It's really about capturing the life you want now. And like Chris said, we see that through real estate the best. And the returns that you can get through real estate is just so much better than what you see typically in other investment options. This picture that you have up here, this has been floating around with some individuals that I know on the internet, on Facebook, and they're promoting, hey, we're super excited. We're getting a 3.5% return on our investment. And your money is going to soar with this best rate. And I'm thinking, like, soar? There's nothing soaring about 3.5%. I mean, like, I just, I just see the power of real estate as being something that's can really drive the type of returns you want and achieve your financial goals, especially your retirement goals, a lot sooner than some of the other investment vehicle options that are out there. And that's why I just am passionate about real estate and love that topic and just what it can offer, especially, as a younger guy, 35 years old, I'm looking ahead already, to kids graduating and moving on to college. I'm like, am I going to be able to set my family up and retire in the way that I want to? Probably not if I'm sticking to a 3.5% my entire life. So that's why we're excited about real estate and, honestly excited to have you guys on today and to kind of talk through some of the differences between multifamily and single family.
Yeah, and so with that in mind, the title of the webinar, multifamily or single family real estate, which investment option is better? See, many people hear about, real estate, investing in real estate, and the first thing that comes to people's minds are all those, flipper flops or, the HGTV or TLC shows that are all dealing with single family. But we want to pose the question, like, is there a better way? Is there a better option for investors out there? And so without further ado, John Thomas, why don't you tell, there are 6 reasons why we like multifamily real estate as a better investment vehicle than single family real estate options.
Okay, we'll dive in. And again, we're going to be assuming that most of those who are on here today, they're looking at real estate as an investment vehicle. And so we're going to just compare the two, single family versus multifamily. Now, I started originally in single family myself, and I have gone through, like a webinar training here, and then a course here, and got these kind of information, so started from, the wholesaling, and then trying to flip, and then moving into rental for the cash flow. And so my experience in the single family market, it was very educational, but not nearly as beneficial as I want it to be from a investment standpoint. So as Chris said, here are 6 reasons why he and I started Breakthrough to Billions and why we're pursuing multifamily real estate over single family investing. Okay, and the first reason is just overall there's better returns and benefits. If you do a comparison analysis to the returns that the stock market or single family got in just overall in the past 10, 15 years, multifamily just outperforms single family better, and it outperforms the stock market, obviously. If you can see this right here, just the numbers itself from multifamily real estate in comparison to the returns on the stock market, you're 10.75 versus the 5%. So it's really difficult for me to say, especially again, kind of watching what happened with my parents and the recession. It's really hard for me to get excited about putting my money into, let's say, the stock market versus putting it into multifamily real estate. And then even when I look at how multifamily performs versus single family, being involved in some of the single family, just the returns are so much greater when I look at multifamily versus the returns I can get from single family real estate. The other reason better returns benefits is just the unparalleled tax returns you can get. I know that many of you might be familiar with the concept of depreciation. And so here, a quick little numbers analysis for you. one of the major benefits of multifamily real estate is the tax benefits. So if I have $1 million and I can put it into a deal with a 10% return, my earnings for this, and this is just, I get super excited about this, is my earnings, it's going to show, yes, that I have a $100,000 gain because of the 10% return, but because of the depreciation, I'm actually able to claim a loss of $46,000. And I don't know of any other investment vehicle that can really do that for you to this level. Basically, I can claim on a multifamily asset, I can claim a depreciation of like 90% in the first 7 years on the value of the building. And that's just something that I can't do if I have a single family rental down the street for myself versus an asset this large. And it just, to me, that's exciting because I'm going to put $100,000 in my pocket, but claim a $46,000 loss. And so that just pumps me up. I don't know about you. Go ahead, Chris.
Yeah, and I know there's been a lot of hullabaloo over the past year or two with, in the political realm of people just going after our president. And say what you want about him. I mean, like, this is not, like, we're not making any claims about him, pro Donald Trump or against Donald Trump. But the thing is, what people want to see is tax returns. And, like, how on earth could he claim a loss for this, blah, 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 not fair, not fair, not fair. Well, his whole stance has always been, it's not my fault for like doing what the tax code allows me to do. I've invested in certain things. This is it. What are you going to do? And so if we understand the numbers and if we understand what this investment vehicle can do, and we're allowed to do it, and there's no ethical quandaries or qualms about it, why would we not do that?
Right, and the benefit of the tax returns you can get with multifamily versus single family is really you're just going to be playing by a different set of rules. And those rules allow you to write off a great amount of depreciation. You can do that, and like I said, save a lot on taxes and while putting money in your pocket. So that's just an avenue that I love. The other benefit is just cashing out. If you're going to have 50 single-family homes, it's going to be a lot harder to sell 50 single-family homes as a portfolio versus saying a apartment community with 50 units. You're going to have a lot of single transactions for those 50 portfolios if you can even try to sell it in one portfolio. So the ability to cash out and sell your assets later on down the road, it's so much easier, so much better returns when you are doing a multifamily unit versus a bunch of single family. And then of course the 1031 exchange, I'm sure many of you guys are familiar with that. Just the ability to kick that tax down the road to your next building and kind of keep rolling that over into the next investment. And I mean, really continue doing that every time you want to level up, right? 1031 exchange into your next building. And that's what Chris and I are really looking at as far as we plan syndications. When we look at the exit plans, going, okay, when are we going to exit this, either sell it as a portfolio, one whole unit, or we'll do a 1031 exchange into a bigger one and just level up our investment each time. So that's exciting things for us, why we really love a multifamily versus single family, just the better returns and the benefits. Number two is apartments are just generally less risky than houses. They're looking back over the past recession, kind of mentioned this, there's just a better performance over it. When you look at the delinquency rates of single family versus multifamily loans from 2005 to 15, there's just no comparison in the loan delinquency rate. I mean, you can see by the gray line there, the single family home delinquency rate compared to the multifamily, it's just no comparison. And the issue is, and we'll talk about this a little bit later on, some of the benefits that you get from the loans that you can get and the rates you can get for multifamily versus single family. And it's just that benefit of if I'm going to go into a multifamily, I'm again playing by different rules, even from a loan standpoint. If I'm going out and buying all these single family homes, and we saw a lot of the home values tank. Well, unfortunately, rental homes are valued the same way, single family. And so, those homes tanked in value, the appreciation was lost, and there's just delinquency score or skyrocketed, whether they were rental homes as single family or just residential. So just looking back, that's just for me a huge thing. Lower vacancy, and this is another reason why single family, in my opinion, is more risky than multifamily. If you're looking at, let's say, a vacancy rate in your single family home, and you have a home that's with one renter in it, that's your whole income. And the moment you lose that renter, your income is now at zero, right? And so let's just say, for example, I know in the Midwest here in Indiana, I could probably find a 2-bedroom home for $800 a month, okay? And if you're coming from, Florida market or somewhere else on the East Coast or West Coast even, that's, you're going to be paying a lot more than that. But in Indiana, I can get a single family home, I'm paying $800 a month. And I can calculate probably with my loan and everything. If I run the investment really, really well, and I'm super optimistic, maybe I can put $200 a month into my pocket if I'm really, really wise with that investment, right? That's probably a little bit, that's probably a bit much. But let's just say for the numbers, you can put $200 into your pocket. And so you're $600 a month in expenses. So if I lose my renter for 2 months, I've just lost a year's worth of expenses, right? Because I have to now pay that $600 a month for 2 months. So now I'm at $1,200 out of pocket expenses, but my income is only $200 a month for the entire year. And so I lose that renter in single family for 2 months, and I am now at almost a loss for that apartment, right? Or for that building. So the vacancy rates, though, when you go into multifamily, it's the reason why Amazon and Walmart succeed, right? They have so many more customers. And so with multifamily, you just get a lot more customers. If you have 20 doors, and you're renting at $800 a month for each one, and you have the same type of breakdown, you can still lose 10% of your occupancy and still be positive cash flow around like $4,400 a month. So it's just a big difference when I look at the vacancy rates and then the risks that is there compared to for a single family compared to multifamily. So just love the difference there. Makes me feel a lot more comfortable when I look at the vacancy. Overall, it's just easier and less expensive to manage multifamily versus single family. And that's honestly just because of the type of things that are in place. One of the things I like to say is just when I'm looking at investments is, do I want a job or do I want an investment? And when I'm looking at a single family, oftentimes I have to manage it myself. Even if I have multiple multi or single family homes available to me, the management is not built into the business plan like it is into multifamily. And so a lot of times the onus to manage those buildings are on us, as the guy. But I don't really want to continue developing a bigger job where I'm managing all these single family homes. What I want is a larger unit with multiple, 50 doors, and there's management already in place, built into the business plan, built into the cash flow, built into the expenses. And in that sense, a lot easier for me to manage because I now just have to manage the apartment manager rather than all 50 doors myself. So that's huge. Apartments, again, are less risky than houses, just in our opinion. Number 3, or Chris, do you have anything to add to this or jump in here?
Just briefly as we move on here and we keep things rolling here, I think that, do you want a job or do you want an investment? Having a portfolio of 30 different single family units is like taking on another job, and that does not align with what we're after and helping to, live life on our own terms and, living life filled with freedom. I look at a massive portfolio of single family homes, and I think of all the different calls that I'm going to be getting throughout the week that is going to be taking away time from what other things that I could be doing, more time spent with my family, et cetera, et cetera. Like, do we want to be missing kids' soccer games to, have to go and, fix a toilet or like deal with this issue? Like, no, like when you deal with the multifamily units, it's something like that's out of your hands. You don't have to worry about it. So that was it. Continue. Move along. Sorry.
So number 3, the apartment building investing is generally just more passive, or I don't have to about that. I am now investing in a passive income instead of something that I have to manage directly, and like Chris said, fix toilets or do whatever. Cash flow is king is kind of like I like to say, and I love the ability to have passive cash flow coming from a multifamily unit, again, because I'm not worrying about as much the vacancy problem. I know that there's a predictable amount. The capital gains is going to be there. I know capital gains are important, but the fact that you also get cash flow from a multifamily unit, and for me, like, that's why I invest, is I want the cash flow there. I want that consistent income from month to month so that I can actually stop working on my day job or on this building, and I can put my time to something else, passion projects, my family, etc. So for me, the cash flow that can come, the passive cash flow that can come from apartment buildings is just so much greater than multiple single family homes. And then of course the consistency there. I know that at the end of the month, this is how much I'm going to be getting. And I have a management in place. They're managing the property, the multifamily property. They're dealing with the vacancies. They're dealing with the turnovers of the units. And because of the scale, it's not something where like I'm having to worry about, hey, are they paying rent or anything like that? So I have that just consistency of that cash flow. And that's what I want when I'm investing, is I want something that's much more passive. So I can continue to devote my time to what I want. So that's reason number 3 why we like apartment building investing over single family investing. And then number 4, and I know I'm flying through this. I know we said we only have about 30 minutes. So I apologize for those of you who are listening. It sounds like we're just blasting through this. I know that at the end, I think there's going to be a couple moments for some questions and answers, but hopefully this gives you a brief overview of why we like multifamily versus single family. So number 4, really you can control the value of an apartment building. And this for me is probably one of the biggest things that excites me about multifamily versus single family investing. And really it comes down to this. If I have a single family home, the value of that property is going to be dependent on the comparable neighborhood sales, right? Just like you would when you go to a real estate agent. And when I bought our first house, the reason why we paid what we did for my first house was because the real estate agent looked up the comps in the area and the neighborhood and said, okay, this is what the market is saying, this is what other people are buying. And so the value of that home, my single family home, it was just dependent on the comparable sales of my neighborhood. It's the exact same thing with a single family rental. When I go to look at a single family rental, somebody's going to be selling that. If I want to buy that home and turn it into a rental, I'm going to pay a comparable price for what the neighborhood is valued at. So that is the single family home. But whereas a multifamily investment, the multifamily investment apartments are actually based on the income they produce, not on the comparable neighborhood sales. Okay. And this to me is huge, because I can then control the value of an apartment building simply by how much income that asset produces. And I can do this, and I put the slide up here. I can do this through multiple ways. So I can take an apartment complex and I can start to sub-meter the utilities so they're all paying their own water bill. I can add washers and dryers into a unit, or add coin-operated laundry facilities, on the actual property. I can add some vending machines. I can do some parking and charge for prime parking, or charge for garage access. I can, if somebody wants pet fees, I can add that. I can add storage units. There's so many ways then. I can, right? Exactly. Cool. And just all these different things, snack shop, whatever it is, gym facilities. I can add all these things to the multifamily property to then boost the income. So I can take, the income being generated, and let's say it's now 100,000, and I can boost it to now I'm getting 125,000, and that is how they're then going to value the actual property itself, not because of the comparable comps in the neighborhood, but actually because of the type of income that property produces. So my ability to control the value of my property simply by controlling how much income that property produces. And to me, that's huge. I can't change the value of a single family home in that way. It doesn't matter if I offer, a free pet grooming service, or, and then charge them for a washer. It doesn't matter. My property is still going to be worth $100,000 or $80,000 as a single family home here in Indiana. regardless of what I do and how much income I'm charging. So yeah, I could raise the rents from 800 to 1,200. I probably won't get any renters, and even if it does, it doesn't matter. So I love that about multifamily. I can boost the income through these things, and then basically boost then the value of my property, and that's just huge to me. And I don't see that in any other type of investment. So I know, Chris, you gave the thumbs up too, because I know it's what we both love about this so much. Yeah. It just makes us super excited. Number 5, why we like multifamily over single family. The financing is just easier, and this to me is another really big one when it comes to financing. I can use commercial loans to buy my properties, and I can use non-recourse loans. Basically, for most of the single family that I was buying, I was basically responsible for the recourse of that loan, right? So if I defaulted, like my personal property or whatever is, I mean, it's at risk. And so with multifamily, if you go big enough, because the property is now valued based on the income it produces, the loan is also based on the income it produces. It doesn't matter, what your credit is or what your involvement is. The non-recourse loan is huge. I can actually have the bank finance it based on the asset itself, regardless of my personal financial statement. And I love that. It takes the risk off of myself. And then just that ability to go bigger. I have better rates, better terms because it's a commercial. I love that about multifamily versus single family. I can have much bigger loans encompassing what I want, instead of trying to go to banks and say, hey, can you finance all these 10 houses? Can I get an 11th house now? It doesn't matter. They're going to look at it and say, okay, you have 80 units. Let's finance it. So I love that. The person we're working with right now, we're excited to be working with them. So just the rates we can get, the terms, so much better than single family. And of course, there's no limit. And that was the one thing that I was recognizing as moving forward in single family. Eventually, there's a limit to the financing. But again, because of the commercial side of things, the financing is just so much broader, and you can cover so much more with multifamily versus single family. And number 6, and this is probably, again, one of my favorites about this, is the ability to scale with multifamily over single family. So my money is going to go further, and I can achieve my financial goals quicker and easier. So if I'm going to say, hey, somebody out there like my parents, for retirement, they wanted $10,000 a month in cash flow. And so if I'm looking at okay, I'm looking ahead, let's say in 3 years, 5 years, by the time I hit 40, I want to be able to have $10,000 a year, or $10,000 a month, sorry, $10,000 a month in cash flow. How long would that take you if you have single family homes versus how long is that going to take you if you just go buy multifamily? And so doing the math, I'm talking about how many homes am I going to need if I'm pocketing $200 a month in a single family home, right? What is that? 200, 1,200. So I'm going to need almost like 50 homes to reach my goal, my financial goal of $10,000 a month. Whereas and the amount of work and effort and working through with a real estate agent and finding that financing to get 50 single family homes, or I could go out and get a multifamily apartment unit for 50 homes and 50 doors and immediately be there, right? So my money's going to go so much further, and I can achieve my financial goals so much quicker and easier with multifamily. And even if I have, let's say, $100,000 to invest, if I had $100,000 in cash on hand, I could put, buy, let's say, 5 single family homes with putting 20% down, so $20,000 down for each. I can buy 5 homes now, or I can put that $100,000 down and buy a $500,000 apartment community, and I'm going to be able to buy each of those doors at like $20,000 or $16,000 a piece per door. So there's so much more you can buy with your investment with multifamily versus single family. So I just love that ability to scale. So at this point, you might be saying, hey, that sounds awesome, but I don't have enough money to go that big. What can I do? Obviously, you can work with the guys here at NuView, and they can help unlock your IRA, and that's something that's super exciting. We love what they can do for you and your investments. And then also something to consider is participate in a syndication. And a syndication is simply where you're going to pool your money with other investors and channel that into a real estate investment project, so you can actually go bigger. So if you only have $100,000 and you can only buy a $400,000 or $500,000 apartment community with that, well, then pool it with 10 other people, and now take your $1 million and buy a $5 million apartment community. So again, basically with a syndication, you're now taking the benefits of scaling for multifamily, and now you're just going even further, again, reaching your financial goals even faster, and then it's even more passive because you don't even have to worry about participating and trying to find the right apartment building. You find a syndication that can do all that for you, and then just simply let them grow your money. So that's another option for you. Obviously, with multifamily, to touch on here as we wrap up, there's always going to be risk, and I don't want to give the impression that there's all this risk with single family, but there's no risk with multifamily. There's always going to be risk, but the key is to manage your risk, right? And the best way to manage your risk is through control. And that's why we like multifamily versus single family. The ability to control the income, to control the asset, to control the outcome, to control the returns just far outweighs that of single family. And then when you look at the ability to go passive with it and to achieve the financial goals you want quicker, it's just I can manage my risk with multifamily a lot better with single family, even though the investment amount is a lot higher. And obviously the biggest thing you guys can control is your education, what you're investing. So as you look for multifamily, be sure to know your numbers, your income, expenses, your returns. This also includes your own numbers. So what's your goal for the investment? What are your desired returns out of that investment, whether you are purchasing multifamily yourself or you're joining a syndication? Make sure you know what the syndication is saying. Hey, as we're pooling money together, here's the expected returns for those. And of course, your final number, as I call it, is what's your goal? And keep that in mind and hit that and say, is this investment lining up to me achieving my ultimate goal for either retirement or extra income or whatever it might be? So there you go. In a nutshell, I know that was fast and furious, but those are really the 6 ways that we like multifamily over single family investments. And I'm just going to kind of leave you with this quote by Michelangelo. And I love this. We kind of have this written on my big whiteboard where I do all of my number calculations. The greater danger for most of us lies not in setting our aim too high and falling short, but in setting our aim too low and achieving our mark. And that's what we don't want for ourselves or for you guys either. For those of you listening, we want to set our aim high and then and hit it, right? And don't settle for less. So go big, educate yourself. It's an exciting world when you start going into multifamily. Chris and I are experiencing that. So yeah, happy to have shared a little bit why we like multifamily over single family. Joey, have you got anything else at this point?
No, thank you guys so much. That was awesome. And also, we are sticking around for a couple more minutes. If anyone has any questions for Chris and John or myself, and you guys can use the chat box to go ahead and ask any questions. Does anyone have any questions at all about anything? We'll give it a few minutes because I know it takes some time.
If those of you listening on, if you want more information and have questions, kind of a little bit more what we talked about, you can read more information. We do cover some of this on our website, breakthroughtobillions.com. You'd also be welcome to email Chris or I. Our emails are down there, chrisleo@breakthroughtobillions.com or johnnthomas@breakthroughtobillions.com. I'm happy to, if you want to reach out, have questions about this topic, feel free, just shoot us an email. Totally happy to answer questions and talk more. So, yeah, but if there's any questions now, I don't see any popping up.
Yeah, and also this webinar for the attendees on here, and you guys too, John and Chris. This is a recorded webinar, and it will be posted on our Facebook page as well for further viewing. So there will be residual views on this, and also you can share it with others as well. And it's going to be posted on our blog as well.
Sweet. And so are we allowed to, so just a question on my end, say somebody didn't sign up for the webinar, can they like go to your blog, or we can reshare that and they can like catch the replay of it?
Yes, absolutely. Everyone that registered, we send them the link to the webinar so that they can view it in case they missed it. And yeah, so everyone will have full access to this and be notified of it when we post it. And Grace, are we gonna, so today it'll go? So yeah, so it'll be available for viewing today, actually.
Sweet.
So.
Well, again, hey, I know, like we said, we went through pretty fast. So again, if you listening, if you have questions more on the topic, I know we blasted through everything, but feel free to reach out to Chris or I. Our emails are down there. Happy to answer questions and talk more about this topic with you. Yeah, it's exciting stuff.
Awesome. Yeah, John and Chris, once again, thank you so much for joining. This was very informative, and please, everyone that attended, if you have more questions for them, please reach out to them. They are awesome, great friends of mine, and I'm happy to be working with them. And also feel free to contact me as well. I'm going to go ahead and type my email in the chat so that you have my email so you can reach out to me, and my phone number as well. But other than that, we are done, so we will be shutting this off here. And thanks, everyone, once again for joining, and be on the lookout for the webinar to be posted.
Hey,
All right.
Appreciate it.
Thanks,
everybody.
man. Thanks, everybody. Goodbye.
Yeah, thank you.
Thanks, everybody. Have a good one.